This story was refiled to clarify state bank activity in spot yuan market in 13th paragraph. By Hideyuki Sano. Tokyo, Reuters. Asian stocks edged higher on Friday on signs of rapprochement between the United States and Europe over trade issues, and the yuan staunched losses on buying by Chinese state banks, though concerns about the Sino-U.S. tariff dispute tempered overall optimism. European shares are expected to be firm, with spread bettors looking at flat to higher openings of 0.3% in Britain, a Euro trademark SFTSE, France a Euro trademark SCAC, and Germany a Euro trademark SDAX. MISI a Euro trademark S broadest index of Asia-Pacific shares outside Japan ticked up 0.3%, though Chinese shares underperformed, with the CSI 300 in the red for most of the day. Euro markets are worried that the Chinese economy will slow as trade frictions with the US intensify. We think if the US slaps additional tariffs on $200 billion goods from China, that would shave off China Euro trademark S growth by 0.5 percentage point, Euro said Shuji Shirota, head of macroeconomic strategy at HSBC in Tokyo. Japan a Euro trademark S Nikkei eked out a 0.1% gain, though it was capped by worries that the Bank of Japan could scale down its asset purchase at its upcoming policy review next week. MISI a Euro trademark S gauge of stocks across the globe, ACWI, was up 0.05% after hitting 4-month highs on Thursday, when European car maker shares gaining 2.6% after the European Union and the United States agreed to negotiate on trade, easing fears of a transatlantic trade war. U.S. industrial shares also made gains, rising 0.8%, though the S&P 500 index dipped 0.30% on Thursday, due to a 19% dive in Facebook on its earnings, showing slowing usage. While that pushed down the Nasdaq Composite 1.01%, other U.S. tech firms held firm, with Amazon.com shares gaining 3.2% in after-market hours following its stellar earnings. The 10-year U.S. Treasuries yield edged up to 2.9840%, its highest level in 1.5 months, on receding worries about trade tensions. Yet Asian shares were more subdued as a heated trade dispute between Washington and Beijing have shown few signs of abating. Now that Washington does not need to use its energy to fight with Europe, it could increase pressure on China, Euro said Nobuhiko Kuramachi, chief strategist at Mizuho Securities. So far this month, MSCI China A shares have fallen 2.6%, taking the biggest hit from U.S. President Donald Trump, a Euro trademark S threats on tariffs and other issues among major markets, compared to 3.3% gains in MSCI ACWI. The Chinese yuan eased, on course to mark its 7th week of losses, although the losses were cushioned by Chinese state banks a Euro trademark swapping of dollars for yuan in the forward market. There was little evidence these banks had also been selling spot dollars, as they have been in recent weeks. The onshore yuan traded at 6.8065 per dollar, near Tuesday a Euro trademark S 13-month low of 6.8295. The Thomson Reuters/HKEX Global CNH Index, which tracks the offshore yuan against a basket of currencies on a daily basis, fell to its lowest levels since May last year, having fallen 5.2% from a 2-year high hit in mid-May. The euro traded little changed at $1.1647, having fallen 0.73% on Thursday after the European Central Bank signaled no change in its timetable to move away from ultra-low rates or end its bond purchase program. The dollar slipped 0.1% to 110.98 yen as the yen got a lift from rise in Japanese bond yields. The 10-year government bond yield hit 1-year high of 0.105%. In commodities, oil prices extended their recovery, after Saudi Arabia suspended oil shipments through a strait in the Red Sea following an attack on 2 oil tankers. Brent crude futures traded flat at $74.52 per barrel, having gained 2.0% so far this week.